Hello traders, welcome to my YouTube channel. My name is André Cardoso. Some of you are already familiar with my work. Thank you for being here and thank you for following, for those who are following me on socials and on Twitter specifically and on Facebook. And for those who are here for the first time, I hope somehow, you take some valid information from what I will share here today. So my objective is to get you synced with a concept, not with a specific setup or a specific opportunity to trade. My objective is not to put you at risk inside the market. Basically, I want to show you those advanced patterns, those ratios, those Fibonacci ratios, and obviously sharing my view inside the market with those who are already trading and who have already larger experience trading the market. So I want to share a few things with you today. So I will start with cable. This is pound versus dollar, and this is a daily time frame chart. I shared this pattern before the completion point, so before the pattern gets completed with this the head of these inverted edge and shoulders developed later or formed later. We can see the market has nailed the 224% extension, the Fibonacci extension, completing the pattern, which has forced the price to target the default or the minimum expectation, the 38% retracement from all these swings. So that is a minimum expectation. As we can see, the market has nailed that Fibonacci retracement level and it started to fall. As soon as the market starts to approach, and because we have a new lower low below the previous one, so we have also a false breakout below extended above at 168 extension. As soon as the price starts to approach those highs and this previous structural resistance, and obviously those levels I need to adjust those levels or to update them. But as soon as the market starts to approach those previous structures, support levels and now resistance, I started to project I started to search for eventual Fibonacci levels for potential reversals. And we found the 168 extension again, 125.28, positioned right above the 38% retracement. So at this point, the market is threatening that Fibonacci extension. I believe that it's still possible to see if the price still rejecting to trade below this previous structural resistance. It was a daily fractal resistance, this candle here. If the price, and it's now a support obviously, if the price recovers this resistance, I believe there will be more bearish momentum below that fractal or below that resistance level. If that don't happen, eventually we will see the market targeting printing a new high above the previous one. We can face this as a potential false breakout. If the market achieves the 168 extension and starts to pull back again, we can face this as a false breakout. Eventually the price will search again for the 168 extension below, but nothing is granted. So I also admit the possibility to see cable and based on the simple fact that the market has already violated this major descending structure. So I believe that can trigger more upside momentum, and if that happens, the 224% extension, the completion point for another bearish shark pattern, 127.47, 200 moving average, and the previous weekly daily fractal resistance. So, and obviously we have above that fractal, we have the golden Fibonacci retracement. And that being said, we have a cluster box or a cluster data box where we will see, or let's say, where we may see the price suffering a little or let's say major pressure actually, and if that happens, it can provide a nice opportunity to get involved on a short side, on a bearish momentum. Obviously, if that happens, we have predefined or default targets for that pattern that allow us also to define our maximum limits or our maximum risk for this specific setup, based on the default and minimum expectations for the pattern. We can measure, we can also identify our maximum, let's say, a one-to-one risk-reward setup. It's a maximum that we are allowed to trade. It makes no sense to trade, to engage the market, to lose more than what we expect to win, supported by a specific pattern. So if you are trading a shark pattern, you already know the pattern tends to retrace a minimum of 50% retracement. So based on that specific 50% retracement, we have our limits above, never more than a one-to-one risk reward, and obviously we tend to search for a friendly risk reward approach, like a 1-3, 1 or 1-2 risk reward situation to trade. So this is my view on cable. I admit a recover of this daily fractal. Again, if that happens, it may trigger more bearish momentum. Let's see what will happen if the market starts to, actually if the market touches this Fibonacci extension level, the 168 extension, printing a new high. If that happens without breaking this daily fractal resistance, without trading below, that can be eventually considered as a false breakout, and if that happens, we will see a breakout of that fractal resistance later as a support, and the breakout of that support level, or the market tends to violate the structure after a false breakout. I admit also, and that will depend the strength of the momentum, but I also admit the possibility to form that sharp pattern above a 224% extension. So let's move on into euro versus dollar. A nice setup here. Let's see if it will work or not. We never know if the setup will work. What we know is where the pattern will invalidate and where are the default targets, and again, that helps us, that allow us to identify our maximum risk for a specific pattern. So let's start from the beginning, from left to right. So we have this previous left head, right shoulder, head and shoulder formation. Minimum expectation or default expectation for that pattern at 200% Fibonacci extension, as always, and the market, as you can see, has achieved that level already. But between this fall, we have also this bearish Cypher pattern. I shared also this pattern among the communities I'm working with. Bearish Cypher pattern, a nice sell-off from the 78% retracement. Then the market extended to the 127, 141. As soon as the market achieves or touches the 127, I shared immediately the butterfly pattern, and the market has pushed below the 141 just by a couple of pips below the 141, reinforcing this descending channel structure support trend line, and printing a double bottom. So what we have here at this point is a double bottom, a technical double bottom. We can see this perfectly on a daily time frame. We can see the first bottom being retested. I admit also the possibility to retest those levels, but I see this as a double bottom already, a technical double bottom. And that being said, we have a broken neck above. If you go into a 12 hours time frame chart, we have a clear broken neck above, we have a resistance, and we have now a pullback. So let's push again my draws here, and let's decrease the time frame into a 4 hours time frame. And let's keep focus on this, and let me set this initial. It remains the same actually, no matter how you will see it. But this is a perfect scenario for the eventual crab pattern printed above. So, but the ratio, the Fibonacci ratios presented below, if the market breaks above this descending structure, I believe the market will start to trade and will trigger more bullish momentum. Well, and who knows what will happen, but based on the Fibonacci ratios presented, I can start to project patterns above. Oops. I can start to project patterns above if the market violates this structure. There's a lot of social sentiment about that possibility to trade above this channel. Let's wait and see. That nothing is granted. Obviously, we never know if the market will break above. We can talk about probabilities for that to happen. One thing is certain: the butterfly second target is positioned at 61.8 retracement. So if the market needs to touch the second target for the butterfly, it needs to break this structure and it needs to trade above this channel, and eventually a pullback retesting the channel may trigger more bullish momentum after that retest, after a successful retest of the channel. So if the market decides to retest the channel and bounce again, or a retest of the channel and recovering the resistance, and eventually we will see the market keep trading even lower inside the channel, recovering the structure, and an outside return above this major descending channel. But let's admit that we will have a breakout above and a successful retest of this channel, so the market needs to reject this channel as a support level, and then we may see a trigger for more bullish momentum. So what we have now is what we can consider as a 26-18 bullish setup. So I entered this trade yesterday as soon as the market touches that level, that Fibonacci retracement. This is a very common behavior, price behavior. I believe some of you are not familiar with this setup, but this is nothing more than a double bottom or a double top followed by the golden Fibonacci retracement. So and let's keep some attention to this pattern, because a double bottom or a double top requires a validation, and a validation only after a breakout of the next zone. So we have the first bottom, we have the next zone, we have the second bottom retesting the close price of the first one and rejecting to trade below, to close below. So we have a technical double bottom. Actually, we can see that perfectly on a 4 hours instead of a daily time frame. In a 4 hours time frame, we have a perfect retest of the bottom with the price rejecting to close below the close prices of the first bottom. So we have a perfect technical double bottom validated here. So as soon as the market breaks above the next zone, and it has retested that next zone again, and it has traded above, printing a small resistance, a small fractal resistance there, retesting the descending channel resistance trend line. As you can see, I shared that moment among our communities, saying, okay, we are now retesting this structure. Eventually the market will trade lower, and if that happens, I will wait for the 61.8 retracement. This is, again, the 26.18 double bottom followed by the 61.8 retracement, followed by, because the market needs to validate the pattern first, okay, and then it needs to find a resistance. In this case, it needs to find a resistance and pull back to the 61.8 retracement. That will offer you an opportunity to get involved. It's a very simple pattern to trade, and with a very interesting risk-reward approach. So obviously we need to respect the technical double bottom. If you are allowed to do that, you need to set your stops, you need to position your stops below this double bottom, because you know if the market decides to trade below, it will invalidate this pattern as a potential reversal behavior. So that being said, it makes no sense to keep holding your positions if the market already invalidates a potential reversal pattern. That allows you to set your stops below with targets above. And above at, and let's say I use a default minimum target at 127 extension. I can use the structure, the previous structure highs. I can retest of these structure highs. But in this case, we have the 127 extension. And I believe if the market starts to rally from here or starts to trade higher from here, it will print new highs, at least above this previous one, the most recent highs. At that time, the time that I draw this chart, at that time, the 4 hours resistance, it's now a daily fractal resistance. We need to adjust those levels. But again, I admit if the market decides to bounce from this level, I admit the possibility to trade at 127 extension. We can also use the default ABCD pattern, a symmetrical ABCD pattern. So as you can see, the symmetrical ABCD pattern projected from these lows, a few points below the golden fib, projected above, that will put the price trading the 50% retracement. The 50% retracement from those, from this monthly fractal resistance above to this weekly and daily fractal. So we have a resistance, a retracement, we have a retracement, a Fibonacci retracement position here, and that projection will put the price trading the 50% retracement. And by default, we search for that symmetry, that potential symmetrical ABCD pattern. So that being said, I'm already positioned on inside this setup, so I'm just expecting one of two things to happen. A breakout below the double bottom will invalidate the pattern and will kick me out from this setup. And another one is a retest of the channel, a breakout of the channel, a retest of the channel eventually, which will trigger more upside momentum, and obviously breaking all those levels will increase the probability to achieve the default target, and will also increase the probability to wipe out all those highs, including the weekly fractal resistance, recovering the monthly fractal support at 112.15. Recovering these monthly fractal supports, we will see a retest of that support eventually. And the market tends to retest it. It will not be easy for sure to violate these monthly fractal supports. So this is a support printed just for you to have an idea. We are in a 4 hours time frame chart. I don't know if you will have. We have. This is a monthly fractal from November last year, so 12 November, I believe. So that being said, recovering that support, it will be an important fact if that happens, but it will not be easy for sure. And if the market decides to print this bearish crab pattern above, I will not be surprised at all to see a retest or eventually even a breakout again of that monthly support, achieving default targets, and we will see what will happen. But at this point, what I consider to be important to get focused on is this process: technical double bottom, violation of this previous structure's resistance level, resistance above the neck zone, resistance above the broken neck, and the fall to the golden Fibonacci. The market has found a nice support here. It is rejecting to trade below. Let's see. I don't hope and I don't pray. If you pray, you lose your trades. If you pray for the market, you lose your trades for sure. The gods understand nothing about economy, and that's a fact. But that being said, I believe this is the price behavior or the pattern that I want to share with you. And because you can go back on history and identify a double top or a double bottom, and then just measure, just check where the market has printed the support or the resistance above or below the broken neck, measure the next retracement and see where the market has found the resistance and support levels. Eventually you'll see that golden Fibonacci retracement acting as a support and resistance levels after a double top, after a confirmed or a validated double top and double bottom. So interesting setup here for euro versus dollar. Now Aussie, another interesting one we can see here. Let me push this to the right side. So we have a nice bullish shark pattern printed at 224 extension. I shared also that I shared both the one at 1618 extension. The market ignored that pattern, so we expected that Fibonacci extension to put some pressure. The market has felt something there, but not significant and not at all, not enough to produce a significant pullback here from this Fibonacci extension. And then once the price starts to approach the 224 extension, I told the communities, okay, careful, because the market is nailing the 224 extension. As you can see, the market has produced a nice bounce from here, reinforced later that level, that previous lows, with the bullish bat pattern at 88% retracement, a nice bounce, completing the pattern, achieving the default targets, and beyond those default targets, approaching the highs or the previous highs, and then a new low below the previous one, and an extension above at 1618 extension. So what we have here is a bearish shark pattern at 1618 extension. The market has started, as soon as the market touches this level, the market has started to print a consolidation pattern. It's not a sideways, it's an ascending correction in structure, so an ascending structure with a trend line supporting these lows. So as soon as you see the market violating that structure, it has retested the structure, the trend line again. We can see that if you zoom in, and let me adjust this. Let me just put a trend line here just for you to understand. So we have these trend line supports. It's kind of a parallel channel between all these ascending momentum, a breakout of the structure. So we have a nice bearish black candle, support below the structure, and a retest. And this is the trigger for bearish momentum. So this is where you enter your trade and you set your stops above, because you don't know if the market will trade higher. And this is how you trade a breakout of the structure, a trend line structure breakout. You wait for the market to retest and to start to reject that trend line, and well, that triggers the trade setup itself, or the breakout setup. Nice bearish candle again, and we are trading the 38%. Actually, let me just adjust these to these highs. Okay, and we are not trading the 38% retracement. We are trading between the very first level, the 23%, sorry, and the 38% retracement. So actually the market has found support at the previous retracement. So this is a 38% retracement from these highs, and targets for the bullish shark pattern. So we can see the bullish shark pattern achieving the default targets at 50% retracement, but the minimum expectation at 38% retracement already achieved. So we have the market trading the default target for the shark pattern, printing the 5-0 sequence. This is familiar for some of you. 5-0 sequence triggering more downside momentum. That's what is happening at this point. 50% retracement, default target for the bullish shark pattern, bearish 5-0 sequence, bearish 5-0 pattern, which tends to force the price to pull back. Right below the 50% retracement, we have this bearish shark pattern at 1618 extension, consolidation period, kind of a 3 drives pattern here, 1, 2, and a third drive, and the market pulling back. That being said, default target for the shark, again, 50%, always. That may trigger more upside momentum. We will see. What can happen from here is the market to recover this structure, this virtual structure. This is not a trend line structure, but I can see the market trying to recover and retest again this parallel channel, and the eventuality to recover that structure, it will put the price trading higher. Attention, because there's a second chance for a bearish shark at 224% extension, 0.6927. Stay tuned to those levels if the price decides to bounce from here. Oversold conditions, small signs of bullish hidden divergence also, but well, let's wait and see. I don't want to start to make some considerations at this point. I'm just trying to show you the price patterns that the market tends to produce and how can we try to take advantage from those. So let's move on. Eventual pullback to the daily fractal is also a possibility, or a recover forming that sharp pattern above. So this is New Zealand. The same way at the time I was starting to draw this pattern, very similar to the Aussie one. This was kind of a megaphone projection, so we can see the market printing higher highs and lower lows inside the consolidation or the corrective structure. I was expecting, okay, eventually the market will find some support at the 38% retracement, 50%, retesting this structure, finding some support there. Actually, the market has found some support at this eventual or virtual megaphone formation, but it has failed to find to trigger bullish momentum, or to find nice support. 4 hours fractal support printed there, violated already, so the Kiwi is now trading below the golden fib. So, but again, 4 hours, 12 hours time frame, bullish shark pattern at 224% extension. We enter this trade and we exit the trade at these highs. As soon as the market starts to enter into a consolidation period here, moving sideways, we jump out. We have targets. We have the minimum expectation for the pattern above at 64, 68. 68. I'm sorry, but I started to see the price rejecting to retest that level, and because it's very, very close to the monthly fractal support, broken and retested. Monthly fractal support broken and retested, and obviously we have another shark here previously printed, also shared. We traded this bullish momentum, all this swing, and as soon as the market completes this ABCD symmetrical, kind of a symmetrical pattern, we exit the trade and the market starts to sink after completing this sequence. Monthly fractal support from May, okay, from May, and the market has rejected that support. So that fractal support has been rejected already, and the market obviously has found some pressure with the 200 moving average also approaching from above. So I was considering the possibility to form this megaphone formation to find some support. The market is failing at this point, so we need to wait eventually a retest of those highs or a new low. I will not be surprised on Kiwi. At this point, we have no clear picture of a potential pattern. Let me go into a lower time frame just to check this false breakout and extend that false breakout below. So let me use an extension from the most recent highs to, no, you are trading below the 224% extension, so invalidating those those Fibonacci eventual or potential reversal zones, and the patterns obviously that we are searching for is something like a false breakout above the previous highs and support between the 1.628% extension and the 2% and the 2.24% extension. So that being said, the market has failed, and that being said, we need to wait for something else. So if the market decides somehow to fail, or if the idea that you have for a specific market starts to fade, you need to wait and to give some time to that market or to that instrument, and you'll shake later. So at this point, I will not be surprised with a retest of those lows. Dollar versus CHF, trading above, trading higher at this point for the day, and retesting this. I need to increase this time frame because it's looked like a mess on a lower time frame. And eventually even on a higher time frame for some of you, but let me try to share what we have here. So we have the 1.618 extension, bullish crab pattern, this green bullish crab pattern. I shared this before the completion point. I shared this pattern as soon as the price starts to approach and form this bottom. So as soon as the price starts to approach the Fibonacci extension, I shared the uncompleted pattern, and then the market has produced that bounce, and finally it has achieved, it has touched that Fibonacci extension, completing the pattern. From there, new bounce, and here we are at this point. Basically, possibilities at this point: major bearish bat pattern, this blue bearish bat pattern, if the price decides to trade above. That pattern is projected at this point at 1.017. So, and what we have here, and let me just hide this pattern just to get focus on this process here, and let me also change this color into it can be like something like this. Okay, what we have here, so we have also an eventual double bottom there. The market has closed below the previous first bottom, so this is not a technical double bottom, but only the market will prove if this is a double bottom. So if the market decides to break above, we can consider this as a double bottom. That will trigger for sure more bullish momentum. And what I'm suggesting here is a bullish, actually an ascending wedge. And from this level, I will not be surprised to see that wedge breaking above, breaking higher. If that fails, obviously we need to wait for the violation of the most recent fractal support level. That may trigger also momentum for a downside at this point. So at this moment, this pattern still a possibility. So we need just to adjust. We just need to adjust those highs. If the market decides to reject to trade higher from here, we can face this. We can consider this as a false breakout. And if there's a false breakout, we search for an extension below. No, we don't trade searching for that extension. Okay, we can trade a breakout of this structure. We don't trade just because we project a pattern below. We can trade a breakout of that structure, expecting the market to trade lower. And if the market decides to trade at those levels, be careful, because the market can bounce from here and then later keep trading lower. But that may offer a counter momentum or a counter trend opportunity. That being said, we don't short the market here just because we think the market can, or just because we have patterns projected below. So I have also patterns projected above. What we will do? We will buy the market just because I have. What we will do? You will sell the markets with targets below, and we will buy the market with targets above. You do the same thing, both things. You enter in two different trades, to buy and to sell. No, we will wait for the structure breakout to trade above if you want to trade higher with dollar versus CHF, I suggest to wait a breakout of the weekly fractal, eventually a retest of that fractal on a lower time frame. You go into a 1 hour and 4 hours, or eventually even on a 15 minutes time frame. You wait for a breakout and a retest of that fractal, and if the market decides to reject the fractal as a support, you have a trade. You can do the same thing with this structured trend line from this ascending channel. If the market decides to break above the descending channel, break the channel or breaking the wedge, and then the trend line actually, and then trigger your bullish momentum. The same way below, we wait for the breakout of the structure, the eventual retest of that trend line support will trigger more bearish momentum, and we will see what will happen. If the market decides to print that pattern later, careful, because there's a possibility for a swing, for a bounce higher, and that can happen also from above the fractal, the weekly fractal, or below the fractal. That will depend where people start to position their stops. If people start to respect the most recent fractals, and if trading the 1618 extension or a retest of the weekly fractal support is enough, you will survive with this bullish shark pattern at 1618 extension. If people start to put their stops very close to these most recent lows, they will push the price back, hunting all those stops, and then eventually there's a possibility for the market to bounce after hunting all those stops below. But stay tuned. Above, if the price, the same way that if we wait for those patterns and we take in consideration those levels, not because we want to buy the market, but if you sell, you need to take in consideration those levels, at least to partition your trade, at least to break even your trade if you don't do that during this fall, if that happens. The same way, if the market decides to trade higher or to trade above and form this bearish shark pattern at 1618 extension, actually the bearish crab pattern at 1618 extension based on a Fibonacci ratios presented at this point, if the market decides to trade at those levels, that may also offer a fall from those levels. At least the pattern will suggest that to happen, a retest of that fractal. So if you buy the market, if you buy the breakout of the structure and the breakout of the fractal resistance, careful with those levels. I suggest the same way, if you don't partition, if you don't start to split your trade during this rally or this bullish momentum, I suggest you to do that, or at least at those levels, to break even your trade and to start to partition your trade. A trailing stop, it's a very useful solution for me. I use a dynamic or a trailing stop behind or beyond, let's say my second target. As soon as my patterns achieve the second target, I tend to activate a dynamic or a trailing stop in order to follow if the price decides to keep moving in my favor. I just need to follow with a stop loss position at a profit, but with a dynamic or a trailing stop behind, just following. So that being said, let's move on. Dollar versus CAD. Let me see what we have here. So let me go into a daily time frame, because I believe it's clear from here. So and eventually it will not be so useful as other pairs at this point, but what I see is a very simple behavior here. So we have a 3 drives pattern. It's a position at this point acting as a reversal, kind of a wedge or a 3 drives pattern. And we have some Fibonacci criteria here, which may, well, if the price decides to pull back into these 224% extension, retesting these fractal support levels and printing that chart, that may offer also another opportunity to get involved. But at this point, well, I don't like to make these assumptions because we never know if the market will trade, but at those highs. But we have this descending channel. I admit the possibility to retest the highs of that channel, and eventually to print that bearish Gartley pattern at 127 extension. There's nothing telling me, okay, there's a higher probability for that to happen. At this point, we are moving sideways, let's say, in a huge corrective structure. There is no clear picture at this point what we will do, what we have to do at this point. So I need to wait, nothing specifically for dollar versus Canadian dollar. Let's check just oil, because there's a correlation between both, obviously. Well, but let me go into a 2 days time frame. Let me see if it's possible to show you at least in a 2 days time frame chart. Descending trend line resistance broken, and the 200 moving average now positioned above on a 2 days time frame chart. Let's see the daily time frame. Daily time frame, the 200 moving average acting as a support already. The picture that I have for you, it's a long-term picture for oil. At this point, we need I need to increase my time frame for oil, because the recent events, I believe people keep digesting those events, and the market will suffer from uncertainty, and we don't know very well at this point. But the patterns and the ratios that I have here, my friends, let me show you what is happening with oil. This is the golden Fibonacci retracement from all this bearish momentum. So the market has printed these highs, the bottom, and then retraced to the golden Fibonacci retracement, and then breakout of the structure, as you can see, 200 moving average also, and the price sinking into new lows, monthly support positioned below. Monthly support, the market pulls back, and it has found resistance at the golden fib. Okay, then the market pulls back again, and it has found support at the golden fib here. The market pulls back again, and it has found resistance at the golden Fibonacci retracement, the golden fib again. The market pulls back again, and it has found support again at the golden fib. The market has bounced again, and it has found resistance at the golden fib, and the market has retraced, and it has found support, close prices at the golden Fibonacci 628, retested the 88% retracement. Actually, the market retested the lows, but it has closed above the golden fib again. Okay. Now, and you will see, no, so you need to search for the golden fib again. No, because the market is already violating that Fibonacci retracement. We are trading above the previous structure highs, and we are breaking above all this structure. For me, I believe the event, unfortunately, the event that happens during this last weekend on Saudi Arabia, trigger the breakout of this structure, and I believe the market will keep above that structure. That can fail, and I need to adjust those patterns, because those patterns are already, we need to adjust those highs. It's still a possibility. We will see if the market decides to pull back all those gains If the market decides to pull back, we will see the market retesting those highs and eventually printing those patterns below. I don't think oil will trade at 27 or even below the 40s or even below these previous structural lows. This is a weekly time frame chart, okay? So I admit the possibility to print patterns above 73.29 exactly. 127 extension synced with at confluence with the 88% retracement. So this is my Gartley pattern, and one of the patterns that I will not regret for sure. Even if the market fails me, I will not regret to short, because the perfect ratios between the golden Fibonacci ratios, that will force me to short the market there. Obviously, that will depend on our other market conditions, but that is my main objective at this point. I want to see oil trading at those levels, and if that happens, I will try a short on oil from those levels with default targets predefined. Okay, I don't trade just because I want to short it, or just because I think the market will trade at $15. Not at all. I trade a default target. I have a risk-reward situation and a strategy to put in action, and I will put in action if the market offers me that opportunity. At this point, break out of the structure, go into a lower time frame, and again, this is not, I'm not here to suggest you to trade or to put you at risk. The market has already retested, it has nailed the previous structure, as you can see here. On a 4 hours time frame, I believe it's clear. Let me try to see. It's clear. We have this descending trend line resistance covering those highs, these previous highs, retested. I can't go. I can show you this on this time frame. I need to increase my time frame again. But keep the picture. The market has already retested this previous descending trend line resistance, and it has rejected, and it's starting to trade higher. So the market has already produced your trigger to try to get involved and to participate in this for the eventual bullish momentum on oil. But again, I admit the possibility to form the Gartley above this, and let me rephrase this, because the eventual retest, and that may happen also. The eventual retest of this structure may also offer you new triggers to go higher if you think the market needs to trade higher, or if you have let's say fundamental reasons and other reasons, other technicals showing you the possibility for that to happen from this structure as soon as the market starts to approach these levels. I admit a retest of this fractal resistance now as a support, and if that happens, that may trigger also more bullish momentum. We can try to identify also the potential. Let me activate the magnet. We can try to identify the potential one, at this point it's a virtual trend line support. We can try to identify that eventual trend line support and say, okay, if the market decides to fall and retest this trend line, and for that to happen, I believe it's a deeper pullback. If that happens, a retest of this, or a reinforcement, let's say a reinforcement as a support, may also trigger more bullish momentum for oil. I'm not seeing this happening. I believe the market will stay above this daily fractal, but who am I to assure that? No one can assure that will happen. Well, I'm bullish for oil at this point, without ignoring the possibility to be wrong and the market to sink, and then eventually we will start to project those patterns below But nothing assures me that will happen at this point. During the weekend after the event, I think to myself, okay, oil will trade higher for sure. We just don't know if, as Blake Morrow has mentioned yesterday on Forex Analytix free webinar, usually people likes to fade these rallies, those bullish rallies on oil. People tends to fade them, and if that happens, eventually we'll see that strength shown on this chart, and we'll see oil trading lower. So let's move to dollar versus NOK, another very interesting pair. I'm not sure how long. So 15 minutes already, no issues. Take your time. Dollar versus Norwegian krone. What I want to show you is this bearish crab pattern at 168 extension, 3 drives pattern printed above. I was expecting that third drive as soon as the market starts to bounce from these lows. We have signs of bullish hidden divergence between those lows, suggesting upside momentum from this level, retesting previous structure resistance, support, bullish hidden divergence, and a new high. Third drive, retesting or reinforcing one. At that point, it was, in my point of view, the resistance trend line from this ascending channel, retested. 3 drives pattern printed above. It has found support a few points below the previous support level, and we have now these eventual head and shoulders. For that to happen, note that the right shoulder eventually it's formed already. Usually I project the right shoulder below the highs of the left shoulder. Okay. Or at least try to think that the possibility to retest the highs of the left shoulder. Golden Fibonacci retracement also a possibility, with limits to form the right shoulder at 78% retracement. So trading above, I will ignore that possibility to consider this as the right shoulder, and eventually the market will print you something else. But the right shoulder can it can be printed with limits at 78% retracement from the head to the most recent, from the head to the neck, a retracement to the 78% retracement. That can happen, but it can be formed already eventually, and if that happens, you will have an opportunity to get involved below the next zone. And again, the way I see the breakout of the structure and the way we should trade a breakout of the structure is only after the retest. I need to see the price trading below. Okay, let me clear this. I need the price trading below, and it can happen right immediately below the next zone. I need to see the price retesting the next zone, and this momentum, this swing will trigger those bearish or the downside momentum. Okay, 200% Fibonacci extension is the minimum, or the default, not the minimum, the default expectation for the pattern. Previous monthly fractal resistance above the default projections, and shark patterns between the 160-180 extension and the 224% extension. Note that the 200 moving average on a 12 hours time frame chart is now pointing to or suggesting some pressure at the golden Fibonacci extension, the 168 extension, synced with the monthly fractal. So eventually, if that happens, if a breakout of this next zone ends up being a reality, we will see what will happen as soon as the market retests that fractal at 168 extension, with that 200 moving average approaching from above. Again, the shark can extend to the 224% extension, and that may put the price retesting or reinforcing this ascending structure trend line as a support again, and the violation of that structure, you can imagine a retest of the weekly fractal initially, and eventually a deeper pullback for dollar versus NOK, which we believe will it will happen at some point. It will break the structure at some point. But let's focus on the patterns, because I don't short the market immediately with stops above, just because I think the market will rally below the weekly fractal. I don't know if that will happen. I need to take advantage from the patterns printed and try to follow that momentum if that happens. So one of the patterns that we have here, if that happens, that allows you to manage your position and to try to capitalize or to maximize your profits, is the 3 drives pattern. So if you engage at that pattern, you start to partitioning your trade, and you break even your trade, and you just need to keep following the dynamic or a trailing stop or a manual adjusted stop. At some point you need to adjust your stop loss to profits, and you need to keep doing that process during this fall if that happens. So that will help you to maximize your profits. But you need a motive to get involved and to trigger your trade. No, you need something you need a strong motive to put your capital at risk. You don't short the market just because you saw someone saying on socials, or just because you see me here. Okay, André is thinking that eventually the market will retest the weekly support, so I will short the market. Not at all. We need the clear evidence for that will happen, and we need motives to trigger those momentums. So let's not go crazy and start to engage the markets just because someone expects something. And no matter the experience that person have, you can talk with a lot of experienced traders. They also fail with the expectations. So don't think just because people trade the market for long periods of time, they will not fail. They are very disciplined with the risk and how they manage their positions. Well, there are a lot of very important things aside of one simple trade or one simple loss or one simple win or profitable trade. So there's a lot of more. Actually, you can be a terrible trader or undisciplined trader with no rules and making tons of money, so just because you are a lucky guy. So you can face the luck every day, and you are the luckiest guy inside the market. Who knows? We never know about that. But luck, we need luck inside the market for sure, for the pattern to work. If I trade the pattern, I need the luck for the pattern to work in my direction. If all the ingredients there confirming or suggesting that bounce, even better. But even with all those conditions together, eventually the market will fail you, just because there's a pattern with let's say 1, 2, or 3 indicators saying or suggesting you, okay, this is the best moment to buy this specific market. That's not granted, and the market will fail you. Even being the most disciplined trader, you will fail, and that is granted for sure. Even being the most disciplined trader, you will fail for sure. And the great question is how you manage your losses, and are you allowed to suffer from big losses? I don't think so. So there's no trader inside the market able to survive suffering from big losses after big losses. So you need to control your risk, your capital, and you need a motive to trade the market. So that being said, let's keep moving and stop this psychological appreciation at this point. So dollar versus NOK, eventual edge and shoulder formation, breaking the neck may trigger more bearish momentum. Do not ignore the invalidation of that structure if the market trades above the previous structure highs. Dollar versus Mexican peso. Another one, another interesting one. Actually, they are all, even if they fail me, they are all interesting. Bearish shark pattern printed at 1618 extension. This gray pattern printed above at confluence with the 127 extension. Another Fibonacci extension level here. And that being said, we have also one alt bat pattern at 113 extension. This red, this bearish alt bat pattern, the market has extended above, reinforcing this potential trend line resistance. It has started to fall. It has found some support at those levels. Previous structure resistance is now support. Well, I published this possibility to develop and to form these eventual heads and shoulders. Who knows what the market will produce from here, but the market is showing some potential for a bounce here, which I think will be limited. I don't think the market will trade much higher, or at least will not invalidate that structure, at least without retesting this ascending structure, or without printing new lows below the weekly fractal. Not granted, but that's just me thinking. Well, I admit the possibility to form somewhere a right shoulder below the highs of the left one, so not that the left shoulder highs are positioned here. So those are the left shoulder highs. And that being said, actually it's this one. Okay, those are the highs of the left shoulder, exactly. And this the orange pattern, this is a Cypher at 78% retracement. So if the price decides to sink below this fractal support level, I admit a retest of this ascending structure trend line as a support line. And if that happens, actually let me just check another trend line, because I need to just to check what we have here, because that can also happen, a retest of this this is not a trend line at this point. We need to reinforce that trend line at least once again to call it a trend line support, and that can happen. So the eventual Cypher pattern, if the market finds some support there, 78% retracement, 1907, so that may produce some interesting bounce, at least a 38% retracement. Obviously, breaking below this ascending structure, which we believe also that can happen, above or below, obviously. Actually, we have a lot of people considering the possibility to trade much higher on dollar versus Mexican peso, but at this point, and based on the structure that we have, I prefer to wait. Wait for a pattern to trade. The Cypher pattern is one for sure. If the market decides to approach this level and reinforce this structural trend line support, I can try. At least I have the risk reward on my favor, on my side, so I can try and attempt to go higher. But do not ignore the possibility to break below this structure support. If that happens, that will open a big window with extreme objectives to retest. Not extreme, this is a daily time frame, this is not so extreme, but with objectives to retest the lows or the previous structural lows. Okay, we have previous lows at 1842 or 1845, 1794. So I admit the possibility to, if the market breaks below, to trade even lower. Dollar versus NOK, interesting if the market decides to print these heads and shoulder formation. Let me try to project this pattern. So if the market decides to violate this structure, what can we search for? Actually, it's there, 200, it's already there, the 200% Fibonacci extension, 1859. So I admit, breaking below this channel, I admit the market will find some pressure at those levels. This is a default projection for the eventual edging shoulders forming above. Now, more. Dollar versus yen, and another one, as I said before, they are all interesting at some point. Sometimes they are not so interesting at all, but during these previous weeks we have those bullish patterns for the yens and others that I show you already. Bullish sharp pattern, 224% extension, eventual double bottom there, validated already, and the market ends up confirming that as a double bottom. Inverted heads and shoulders formation inside, so in the middle of this double bottom, the market decides to print these inverted heads and shoulders formation, and above the default projection at 200% Fibonacci extension, retesting this descending channel trendline resistance and breaking above. So we are now threatening to trade above that channel resistance trend line, and we are also approaching the 160-on-8 extension. Okay, the 160-on-8 extension for the bearish shark pattern. So this is the first option. As I said before, the shark can extend to the 224% extension. That will put the price trading above the previous highs, 110.12. But at this point, and because we are also approaching, or actually we are leaving from oversold, overbought territory, so we are now again, the market is showing some potential for more bearish momentum at some point, but I prefer to wait for I prefer to wait for the 224 extension, because I believe the market will trade higher from in general the yen will trade lower, so everything which is related to the yen will tends to trade higher, obviously. So dollar versus yen and pound versus yen and New Zealand versus yen, eventually those will trade even higher. But at this point we are approaching that bearish shark pattern at 160-on-8 extension. So if the objective is to remain below this weekly fractal, that may trigger some bearish momentum. I believe it will trade higher. If this happens, I believe also, or the pattern will suggest a pullback, and that may put the price trading again to these to the levels where we are now. So if this market, imagine a situation where the market goes nowhere from here and it starts to move sideways inside a consolidation process, moving sideways without breaking this range, let's say. If that happens, and if later the market breaks above and trades the 224% extension, eventually we will see the market reacting from there, from the pattern completion point, and retesting this sideways and corrective or sideways moving process. At some point the market will form a resistance here, and if that happens, I will not be surprised to see the shark pattern forcing the price to retest that previous structural resistance. At this point, I prefer to wait, because the market is threatening and it has already confirmed the breakout above this channel. But again, at this point, we can consider this as a potential false breakout. So I prefer to stay out. This can be interpreted as a false breakout, and if that happens, we will see the market pulling back from those levels. Let's wait and see. Now, other yen pairs, euro versus yen. Another one, this one traded below the completion point, 113% extension, bullish alt path pattern. As soon as the market approaches this previous structure support level, I shared these with all those arrows, so just pointing to those highs and lows, and because the market is now threatening that previous structure support, and that it has been rejected. As you can see, these previous descending, let me just put this like this, okay. This descending structure here is now under pressure, so the market is rejecting to recover above this structure support, this wedge formed below, break out of the wedge, new lows, and then the market is now threatening to recover that same trend line support. If that happens, I believe the market will try to recover some of these major losses, the most recent major losses. Default target for the pattern, and because the pattern has invalidated already, the market did not respect it, has failed to respect that specific Fibonacci criteria. We don't know if the market will achieve the default targets just because of that. If the market decides to respect that level, the probability for that to happen will increase. If the market bounces, but without respecting that Fibonacci criteria or that specific Fibonacci criteria, let's say if the market bounces from below the default criteria, that will not invalidate the trade itself or the eventual bullish momentum itself, but will decrease the possibility or the probability to achieve the default targets for a pattern that is expected to form at 113 extension. I believe if you get the point. So if the market is not if the pattern is not so perfect, you can't expect the market to trade the default expectations. You need to make some considerations during that process. If somehow you survive this trade, you need to break even, you need to partition as sooner as later. Or as soon as you can. No? So let's move on into pound versus yen. If possible. And because I'm recording this, starts to become heavy, my computer. Okay, pound versus yen. Let's go. Actually, I need to go into a weekly time frame to show you this round shape, eventual inverted cup and handle. The market has found support at previous lows and eventually is now forming the handle on a weekly, on a daily time frame. Let me remove this because eventually you are thinking this was a weekly bearish black candle, but it's not. So at this point we are trading inside the range between these highs here and the most recent lows. And we are trading the 88% retracement from those most recent highs, which gives which gives sequence to this last bearish swing low, printing the new lower low, double bottom below, broken neck, what I've done here, broken neck above this black line here, broken neck, resistance. So what can we wait for at this point? Patterns. We have the 88% retracement, bearish alt path pattern, bearish bat pattern. We expect a 38% retracement as a minimum expectation for the pattern. Note that we are breaking above this descending trend line resistance, which may trigger even more upside momentum for this pair. So at this point we are trading a lower degree or a minor, based on a weekly and a daily time frame, a lower degree event, a lower degree bearish pattern. I admit the price can retrace to those levels. Above, if the bat pattern fails you, you have the 113 extension, the alt bat pattern, and the 168 extension, the bearish extended crab pattern. At this point, none of them are clear enough to say, okay, eventually there's a trade set up here, there's a pattern here. That's granted. The market has found some pressure there, as we can see, but this is not the price level where I think it will happen. I believe the market needs to trade at least the 38% retracement from a weekly perspective, and that will put the price approaching or very close to the weekly fractal resistance. So let's ignore, let me rephrase, let's not ignore the bearish bat pattern printed above, because we can see a handle formed there and then the market falling from here. But when I talk about minimum expectations, I use the 38% retracement, and that is crucial for me. I need the price to respect some of the criteria that I search for. So if the market fails those criteria, I avoid the trade, I avoid to participate. I need to see pound versus yen retesting the 38% retracement and retesting the previous structure support. That may trigger more bearish momentum from here, and we will see if that will end up forming the handle expected, because the extension or the default projection for this pattern is something similar to this momentum, the measurement from the bottom to the highs projected below. And as we can see, the projection below this structure may offer you a very interesting opportunity to get involved. So I have already the projections below 98.70. So the projection for these inverted edge and shoulders, which will validate below this support, just because I'm expecting the market to print the handle there. I'm not saying the market will form and will complete the sequence later. We can try an engagement there in order to fill those assumptions and to fill those expectations, but nothing is granted. But take a look at the default projection. So eventually you'll see pound versus yen trading at 100 again. So we never know about that. But this is the default projection by manuals. If you go into start to study the patterns, manuals and technical rules, you will see those default projections. So if this ends up being an inverted cup and handle formation, eventually we will see that happen. Now let's move on. Aussie versus yen, another one that I'm searching for potential patterns very close to the price, the recent price zone. False breakout below, or a new lower low, false breakout below, and a recovering above the previous structural resistance and approaching the 168 extension, 200 moving average, 74.80, and the completion point for the first option, the first bearish shark option, 168 extension. If that happens, that will suggest a pullback on pound on Aussie versus Australian dollar versus yen. That can happen from the 161 and the 224% extension. One of them will try to remain below this weekly fractal and eventually below the 200 moving average. The other one at 224% extension will wipe out all those stops above this fractal. So I believe the 224% extension is the one that may offer you a nice or the best or the friendly risk reward situation to trade. Based on a higher or a higher degree or a larger or a major perspective, the eventual bearish Cypher pattern, if the market decides to ignore all those levels, eventually we will see the market retesting that, retesting this previous structure support, which is synced with the 78% retracement and the completion point for this bearish Cypher pattern. Attention, because the market is starting to fall with everything which is related to dollar itself. So basically, if dollar starts to rally or to trade higher, we will see those dollar related pairs trading lower, and eventually the market will not form this pattern. Aussie will trade lower, and that may also force Australian dollar versus yen to be pushed lower together with Aussie, with Australian dollar versus dollar. CAD versus yen. Not because there's a specific correlation between those, but if Australian dollar starts to be pushed below because of the dollar strength in general, Australian dollar versus yen should also suffer from that impact, and eventually it will be forced to trade lower. CAD versus yen, I shared the Gartley pattern printed below at 127 extension, so the market is already trading beyond the second target. This is the place where we start to trail our position with the dynamic stop behind for the bullish Gartley pattern. But we are now also approaching the eventual Fibonacci extension and reversal level. So 82.61, so this is the 168 extension. Again, objectives to keep below, and note that we have this bearish descending trend line resistance. So if the market decides to print this bearish shark pattern, people will start to put their stops right above. The shark pattern at 224% extension will hunt those stops positioned above. I prefer to use this shark at 224 extension and try to protect my position with stops above this monthly fractal, instead of shorting the market there at this 168 extension with stops above. If I put my stops above, eventually I will be hunted and my position and I will be kicked out from this position. That allows me to engage the market with considering this fractal with a friendly risk reward approach for sure, because if you short the market there, you have all this range between your entry and the monthly fractal to suffer. If the market decides to retest or to approach that monthly fractal, you will have a lot of suffering process during that, and not a lot, because you will protect your position right with stops position right above. You will not suffer too much, but you will have a larger or an extended range where the price will, where a lot of things can happen. Actually, the market can enter in a sideways process and print you 1, 2, 3, or 5 or 6 patterns inside the moving sideways process. We never know. But in terms of risk reward and in terms of which one will offer me the best on the friendly risk reward approach, for sure the one pushed above a 224% Fibonacci extension. More euro versus Australian dollar. Bearish shark pattern printed at 224% extension above this orange pattern. I shared that one. The market has traded a few points above, printing that weekly fractal. This is a 12-hour time frame chart. Double bottom validated with a broken neck. The price started to trade below, and I shared before the validation, before the pattern gets validated, the double bottom, the double top, I shared the pattern and I shared the default projections at 160.63. So this is the 200% Fibonacci extension, a measurement from the highs of the double top to the next zone. And I use the body of the structure and not the shallow wicks and the higher highs and lower lows. I project the two. I search for a default 200% Fibonacci extension, let's say from a line chart, okay, from the body candles and not from the wicks. So we can use a line chart, okay, it's the same of the bodies, higher closes and lower closes from those body candles. So you can use an extension from those highs, so these lows on a line chart, and project a 200% Fibonacci extension. So you can see the market has found has achieved the default targets expectations for the pattern, and it has completed the bullish bat pattern at 88% retracement, retested the bottom, the previous lows, and the bat pattern requires your stops to be placed below the starting point, and that's the reason, because the market can retest those lows. If respected, eventually we will see this price, the price for euro versus Australian dollar, trading the default expectations at 38% retracement. Second target, let's say first target at 38% retracement from these lows. Obviously, if you engage the pattern to the 88% retracement, you need to adjust those Fibonacci retracement levels. So, but at this point, 38% retracement position at 162.42, 50% retracement at previous structure support 163.46, and the golden fib, the second target approaching the previous fractals, 164.50. So those are the levels. If this fails, and because it can fail without achieving or without touching the default targets, alt bat pattern at 113 extension. If that happens, we need to adjust our Fibonacci retracement to that level. If that happens, we may see the price reacting from there and retesting the 38% retracement. And obviously, and as always, if the bat pattern fails you, just grab it, okay? And there's a green bullish grab pattern projected below at 161.8 extension. If this happens, we will see if the market will pull back also to the 38% retracement. As you can see, that bullish grab pattern projected below with default targets projected at this fractal support. So if that happens, at least we have our targets synced at confluence and a very interesting price zone to target, so for the grab pattern. At the same price level, and because we are using the same Fibonacci measurement and the same Fibonacci extension measuring the same swing, projected below this bullish shark pattern with a false breakout above this previous one. So we have a previous high, and then the market extending above, rejecting the idea to keep trading higher, printing kind of a false breakout. And if that happens, at confluence with that bullish crab pattern, we have the bullish shark pattern. Again, minimum expectations, the same 38% retracement. So we have confluence between two different harmonic patterns or advanced pattern formation at the same price level, with targeting, let's say, the previous structure support. Let's wait and see what will happen, but do not ignore a bounce from those levels. We have these, you can see this gray trend line support. At this point, it's still holding those lows. And if that happens, we will see the market eventually trading higher from there. But when we search for patterns, we start to project things, and we wait for those things to happen. We wait for the price to trade those levels. So another very interesting one: euro versus pound, euro pound. Now approaching, now trading the 224% extension. and this is the bullish shark pattern formed at the bottom of these descending structure channels. So we have also the three drives pattern there. We have also the heads and shoulders all projected before the completion point, so before validation, because I like to provide people with time to think on those processes and to prepare their trades, and at least for those who are working with me on a deeper mode on the underground. Basically, the market has achieved and touched the 200% Fibonacci extension, the default target for the heads and shoulders printed above, and it's now nailing, or it's now finding some support, or at least temporary support at 224% extension. So this is the bullish shark pattern. I admit the possibility to trade the default targets from here. Who knows what will happen, but default targets for the shark pattern at 50% retracement. So I admit also euro pound to bounce from here, and eventually a retest of this channel structure trend line as a resistance again. Well, at least it will offer you, it has offered a very interesting and friendly risk reward approach, because we know if the market decides to break below the most recent lows, the pattern will invalidate. So you just need to set your stops below those lows and try to make some profits during this bullish, the eventual bullish momentum there. 4 hours time frame chart. Euro versus New Zealand. This one has already bounced from above, just a few points above the golden Fibonacci extension, the 168 extension, and it's now trading the levels where I can consider these to form one eventual right shoulder. So we never know about that. As I said before, I take into consideration the limits to form the right shoulder at 78% retracement. So if the price decides to trade those levels, I believe, or to trade above those levels, we'll ignore the pattern or the potential pattern formation. At this point, what we had before, the bullish shark pattern at 168 extension, or between the completion points, and supported by the golden Fibonacci is 60-on-8 retracement here, putting some pressure and forcing the price into new highs. I saw the possibility to form these eventual edge and shoulders. So if the market starts to fall from these levels, I admit that can happen. Again, trading beyond the 78% retracement and then obviously breaking the highs will invalidate the pattern. And obviously the probability to form those patterns below will also vanish with the price trading above the fractals above, the fractal resistance above. Obviously, all that can fail if the market decides at some point to reverse again and to start to trade lower, breaking below, and this will take time for sure, unless the price rallies into or falls into a rally mode and breaks these structures immediately. But breaking below this structure, virtual support trend line for now, because it needs to be reinforced a third time in order to consider this as a valid support trend line. But if that happens, if the market decides to break below these levels, and breaking below the monthly support and weekly support level may trigger more bearish momentum. And if that happens, I will wait for one eventual and a lot of things may happen during this process, which will allow us to identify patterns at confluence eventually with these levels if the price starts to fall. But based on the criteria that we have and the Fibonacci ratios that we have presented at this point, a fall below those lows, and I will start to project patterns below. At this point, eventual heads and shoulders, we have a pattern to trade below this blue line. So if the price decides to break the next zone after forming the right shoulder, that may offer you an opportunity to get involved and to participate. Pound versus Australian dollar. we entered this trade at this level 168 extension. We're still holding a small portion of this trade. At least that is my objective. I'm not sure if all my subscribers are holding those positions or not, but that's what I share among them. And well, bullish shark pattern at 168 extension. Actually, not yes, bullish shark pattern at 168 extension. This orange pattern. Then the market has printed during this process. Obviously, we have achieved the default target or the minimum expectations for that pattern. So we have our position protected with stop losses at profit right below this fractal. Actually, the market has threatened our stop losses at that point, positioned below this weekly fractal. So the market keeps respecting our stops below at profit. With half of our initial position size already closed. So we closed half of our initial position size. We have closed half of that position exactly, and we have our position, our stops positioned at profit already. So I'm just waiting for the second target position at that 61.8% retracement. If that happens, I will trigger my dynamic stop, a trailing stop. What the market has produced in the meanwhile, bearish shark pattern at 168 extension. The market has fallen into this momentum. 5-0 sequence. The bearish shark pattern will always form or tends to form the 5-0 sequence, the bullish 5-0 sequence, and nothing more than this swing. Okay, try to follow the lines. This last bearish swing printing the false breakout above the previous one. False breakout, extension to the 168 extension, to the 168 Fibonacci extension, and then the Fibonacci, the 50% retracement or something similar to the 50% retracement. So I believe the market has nailed it. Let me check. I believe the market has traded very close to the 50 or the golden Fib exactly. Golden Fibonacci has support there, and the market trading higher. So at this point, we are again approaching this structured trendline resistance. We have a shark pattern and a second shark pattern projected at 224% extension. We have also this eventual bat pattern at golden Fibonacci retracement position at 182, but that pattern is projected above this structure trendline resistance. So I believe if the price breaks above, it will extend a few points above. It may extend a few points above, and if that happens, I will search for the eventual. We may search for that eventual alt bat pattern, an alternative bat pattern position projected at 184.06. So this is the 113% extension. As mentioned before, if the bat pattern fails you, just grab it. Extend that to the 168 extension, because eventually we will see the price searching for those extension levels above. If the bat pattern fails you between the 88 and the 113 extension, we may see this price trading even higher. Okay, I will hold that position that I'm long with, so I will hold that position, which doesn't invalidate a short on one of those patterns. I can try a short against myself, holding a long from below. I can try to take advantage. The same way the market has printed this shark pattern, it has offered you a bearish momentum and then later resume in the direction of the previous swing. We can expect the same for this bearish shark pattern. The price will retrace 50% retracement, printing another 5-0 sequence and eventually another bounce. Who knows? But that being said, I'm waiting for the golden Fibonacci to put a dynamic stop below my longs from below, and that will eventually put me in a comfort zone, and that will allows me to take some profits from the eventual sharp printed above or not. That will depend on the conditions the market will offer me once approaching that level. And to complete this sequence, I have only pound versus New Zealand and Dixie. So basically, what I'm waiting for on pound versus New Zealand is for this bearish bat pattern. Is a very simple pattern. We have a very nice sequence of advanced patterns here. All of them shared among my communities, the communities I'm working with on a deeper underground mode. So 224% extension, bearish sharp pattern printed above. The price has nailed that price, and it has started to sink. Eventual, I projected then later that the possibility for one eventual edge and shoulders, and then the market has sunk into the default projections, and it has completed this bullish Cypher pattern at 78% retracement without breaking the previous structure lows. And that's why we need to protect our positions for ciphers, for bat patterns and Gartley patterns below or above the starting points, because the market eventually will test those lows or will approach those lows. And if you use tiny stop losses, they will hunt you down for sure. So you need to respect the starting point for ciphers, for bat patterns, Gartley patterns, and bat patterns. Okay. That being said, Cypher pattern printed at 78% retracement. The market has bounced from a few points below, and we are now approaching the previous structure highs at 88% retracement. So I'm waiting to see if the price will print that pattern. The pattern will suggest, as always, a 38% retracement as a minimum expectation for the pattern, which may put the price trading back to 192.38 or something, 192.37, or very close to that level. 200 moving average also covering those lows and crossing all those lows, highs and lows. So previous structure resistance and support levels reinforced by that 200 moving average. So I will not be surprised to see now. And looking into this chart, I will not be surprised to see something like an edge and shoulders formed here. Eventually, we need to wait for that. But if the market prints me the bat pattern, it tends to search for the 38% retracement. And if the market reinforces this level, 38-50% retracement as a support, eventually we will see a bounce. And this may print the left shoulder, the neck zone, the head, and targets for the bat pattern, reinforcement of the neck, and eventually the right shoulder. And we will see then a second target for the bat pattern being achieved with the help of this eventual edge and shoulder formation. Too soon to predict. Actually, the market can print the head at this price zone without forming the bearish bat pattern, okay? But one thing we know, and it's granted, the bat pattern will offer you a nice risk reward, much better than starting or than trying to engage the market at this point. And because I have no motive to try to get involved from there, but I have a bat pattern above. So I prefer to wait, nice risk reward approach, and nice risk reward trade setup. So basically we will trade for the 38% retracement. So this is your initial and expected minimum reward. So based on this, you can manage your risk limits above the starting point as always. So let's go into Dixie and try to think. It's a little bit messy at this point, these charts. Actually, I don't know at this point what what may happen from here. I need to readjust those levels. So bearish shark pattern, 168 extension. As always, that pattern can extend above to the 224% extension, as I mentioned before. That can happen, and that will keep dollar index trading inside this ascending wedge. We can see this kind of ascending wedge. Now let me change this into a 12 hours time frame. Something strange here in this view. So let's see if dollar index keeps trading inside this bullish wedge, or ascending wedge, not a bullish wedge. Actually, it's a bearish wedge. As soon as it finishes, it tends to break below. Let's wait and see. But a new third high and the formation of the shark pattern at 224 extension will not surprise me. But we can see the market has started to react well from the 168 extension here. So the market has traded very close to the Fibonacci extension, but it has failed. And then finally the market has touched that level, and it has produced the expected fall from here. At this point, I still believe the market will trade a few points below. I believe dollar index, before trading higher, will retest this monthly fractal once another time, I believe, and because we have the default target at 50% retracement right below that level, that fractal. Well, let's wait and see. But if you start to project other patterns below, and let me just show you this eventual in the shadows. So we have already some criteria here that allow us to identify the potential bullish pattern at 88% retracement. We never know if that will happen, but it's one of the possibilities. If dollar index decides to, let me just rephrase this. No, I need this tool. So the eventual bullish pattern retesting the most recent lows and rejecting to trade below that may also trigger more bullish momentum, without ignoring again the possibility to form that sharp pattern above. There's confluence between some Fibonacci's above. I trade what I see. At this point, I'm not trading dollar index at all, but at some point, if I need to engage this bearish sharp pattern, I need to wait for the default target. I need to partition my position during that process, break even my position as soon as possible, as soon as the price allows me to do that. And that being said, I prefer to wait. A lower degree pattern projected above, and because I projected this pattern below, for those who think it may trade even lower. So let me extend all this swing to the 168 extension and use this tool again. But this one, I need to change the color into some pink. Okay. New low, new high. Bearish shark pattern projected at 168 extension. We can see this, basically this point B, using the close price and not the shadow and higher highs of the candle, but using the close price here. So new low, pullback, and a new low, retracement, and a new lower low, false breakout below the previous one, immediately recovered, actually recovering the fractal, the daily fractal support there, immediately recovering. And if the price decides to break above those fractals, the weekly and the most recent one, we can start to project these patterns above. So because after a false breakout, the market tends to produce an impulsive momentum breaking the structure. If that happens, if that ends up being the real thing here for dollar index, eventually we may see the price trading and pushing higher from there. But at this point, nothing more to expect than at least the 50% retracement for the bearish shark pattern by default, the default target. Note that the price is bouncing from the 38% retracement, so this is a significant price Fibonacci level. But the default target position below, monthly fractal below, bat pattern position just a few points above the golden Fibonacci, and second target for the bearish shark pattern printed above. So this is the second target for the pattern, the 60-on-8 retracement right below the first one, so the first default one. So I use the first one at 38% retracement, okay? The default one is the 50%, and then I use the second target at 50% retracement. So right above the second target for the bearish shark pattern, the market can produce this bullish bat pattern, okay? This is dollar in. Let me finish with Dixie. Let me just check Dixie and DAX, I believe, and DAX, exactly. DAX. So I shared this pattern with all those colors and add-ons that I tend to put on my charts on Twitter for those who are following. I started to project some patterns between the 161, the 168 extension, the bearish shark pattern has failed here, so I took a short from this Fibonacci extension. The market has ignored completely that fib. There are a second shark pattern position at the 224 extension, but I ignore that pattern at this point because I traded and I send this trade to my subscribers saying, okay, this is my second attempt. This is my second attempt to try to go short on DAX. Well, let's go. I'm going to this trade. I just hoping to that pattern to work, at least to this pattern to work. So DAX bearish bat pattern printed at 88% retracement. The market has nailed that Fibonacci level. I engaged this trade just a few points below that completion point. I'm expecting the price to fall to those levels for DAX and eventually even lower, searching for the 200 moving average. We never know, but that can happen. Note that the market is now threatening this. The market is threatening the breakout of this structured support. Not saying a trend line support. This structure support trend line there. So the market is now breaking below, so which will increase the probability for that to happen. So nice setup, risk reward also interesting, and friendly risk reward approach. Well, let's hope and see what will happen from here. So I believe we take this is almost a 2 hours video, so I need to stop this before you start to get annoying with all these patterns. But always a pleasure for me to share my views, and sometimes I extend my comments. But I hope somehow you take some useful information about how the markets behave and how the markets moves, and the patterns that the market tends to produce, and the expectations that we have for those, and the risk limits that we have for those patterns. So once again, thank you for being here. I hope you enjoy. If you really enjoy the video, just press that like button. It's always nice to get your feedback after completing those educational videos for you. So if you are learning process, keep disciplined and keep focus on your process. Try to avoid and to clear unnecessary information, filter the information that you have at your disposal. Sometimes, eventually, I'm not at confluence with your personality to try to share my educational content, and you need to search elsewhere for another personality to fit with your own. So just because we have experience trading the markets, we are not necessarily the best mentors at some point for a specific person. We need to get synced with the personality of the person to get synced with the strategy that we apply to ourselves. So eventually my strategy is not useful for you to trade. The same, we can use the same patterns to trade with different strategies to manage the position, to manage our risk and to manage our profits and how to maximize our profits. But the objective is actually to try to get you synced into this process, and I hope you enjoy these last 2 hours video, and try to keep disciplined and focus on your learning curve. It's very important to be surrounded with interesting traders and experienced traders, because we learn a lot with those traders. So again, thank you for being here, thank you for following, and I hope you enjoy. Have a nice trading week, or the rest of the week that we have at our disposal, and obviously safe trades for all of you. All the best for you and your families, and have a nice weekend when we approach it. So stay well.